Okay, hi student. For today class, I'm really sure it's a bit rushing, so I can't cover much about Fifo, Lifo, and weighted average cost. So for today, we cover the calculations. So the first one is first in, first out. First in, first out. We call it FIFO. So this is actually the inventory calculation, how we want to compute cost of goods sold and ending inventory. So we have three types of calculation. First is FIFO, second is LIFO, and then weighted average. So we already covered in the class, but still I want to record it, so it's for your revision, extra revision when you at home. Okay, the first one is FIFO, first in, first out. First in, first out. What does it mean? It means that once we have finished good, when we have inventory, of course, when we sell our inventory, we have two kind of account. First is cost of goods sold. One is sell to our customer is considered cost of goods sold because our asset will be turned into expenses. So from here we minus with sales, but the inventory that we cannot sell to the customer is remain in our company or in factory, in a warehouse. So we will treat it as a ending inventory, which is our asset. So this is our asset. So okay, um if you buy material, or maybe you buy inventory from your supplier, so there will be a different range and different time and different price, because maybe it's from the different supplier, or maybe the supplier has increased the price because of they also have problem of increasing material in order to produce their own product. So their end product is actually your raw material, or maybe you buy their product as your product too, which means you are a retailer. So okay, let's without further ado, so that we start with first in, first out. Okay, this is the example of t-shirt, t-shirt company, which is this company sell the exact same type of t-shirt, but this company restock the t-shirt a few times in maybe 2 weeks, every 2 weeks. So 1st of March, this company, we call it maybe we call it ABC company. ABC company bought 200 unit of $10 per t-shirt on 1st of March, and then second, this is first batch. And then second is 16th of March, 150 t-shirt, but different price at $12 per unit. Then the third one will be 3rd of April, which is 2 weeks after, 225. This is the third batch. Okay, this is how your this is when your company brought the brought the inventory into the company. So that's why we call it first in, first out. Then you manage to sell the t-shirt, 250 t-shirt. Okay, let's say when you bought any batch of t-shirt, if you any batch of t-shirt, you put it in a pile of inventory. So which different with different price and different with different price of cost, with with a different dates, I think, different time when you bought it, and then you put it in the warehouse. So this is your warehouse. So if you manage to sell, can you assume, or maybe can you identify which inventory that you managed to sell? So that's why we have assumption. This is first in, first out. This is the inventory assumption. So assumption. So from here, we can assume that when we sell our product, which means that if we use first in, first out, which means that the inventory that is first in will be the first one to be sold, to be out from the warehouse. So from this one, from here, we can see the first batch is 1st March, right? So this is the first batch. Second batch is 16th of March. Third batch is 3rd of April. So from here, if we use this assumption, if we sell 250 t-shirt, the first batch that we will take out from the warehouse will be here, we um because we assume first in, first out, right? So 200, we take it here, cost of goods sold, and ending inventory. Okay, when we manage to sell, so this inventory will be turned into cost of goods sold. So we need to calculate 250. So we take out here 200 times 10 will be 2000, and then we still have another 50 left. So from here, because this first batch is already finished for 200, then we took another second batch. We took 50 out of 150. So calculated here times 12, and it will be 600. So cost of goods sold for 215 t-shirt will be 2600. Okay, we only managed to sell 250, but we still have remaining of the unsold inventory, which is we treat it as a ending inventory, still in an asset to the company. So we already take out 50 from here, so we will left 100. So this 100 is considered as our ending inventory. So 1200. Then 225, we didn't touch yet. 225 times 16. So it will be 3600. So the total ending inventory for Fifo, it will be 4800. So this is Fifo, first in, first out. Okay, now we move on to Lifo. Okay, Lifo is last in, first out. Okay, here is a bit different with first in, first out, because in first in, first out, we will choose the inventory which is in the early batch, which is the first inventory that we taking inside the warehouse. But last in, first out is we will choose the inventory which is last, will be which is last getting into the warehouse. Okay, so the example will be the same. We managed to sell 250 t-shirt. So from here, we will calculate our cost of goods sold if we manage to sell, and the remaining will be our ending inventory. Okay, our ending inventory will be the remaining item inventory that we didn't manage to sell. So, say with FIFO, we managed to, example in FIFO, we managed to sell 250. So from here, which one we want to choose first? Okay, of course, because we are in last in, first out, we will take the latest, the last batch, which is we taken this inventory is the last batch of inventory that we taken into the warehouse. Okay, so we will choose this batch. So first batch, this is second batch, and this is third batch. So we will choose this batch. So first of all, we want to calculate our cost of goods sold. So from here, we will take 225 this batch because we sell 250. Okay, always remember we sell 250. So because this batch only 225, we take everything 225 times 16. Okay, how much? Because this is not the live class, so I need to calculate it by myself. And it will be 3,000. Oh, okay, 3,600. Then we still have the remaining 25 shirt, so we have to take from the second last batch, which is from here. So we take out 25 from here. 25 times 12, we will get 300. So cost of goods sold will be 3,900 for 250 t-shirt. And ending inventories will be, so we still have the remaining, right? So from here we still have remaining 125, we still have 200 here, so we can calculate 125. This is the amount of inventory we didn't manage to sell, times 12. How much we get it? 1,500. And then the last one will be 200 times 10 from here. And then this is the remaining 125. Then we get 3,500. Okay, so this is our ending inventory. So can we see the difference? This is first in first out. The cost of goods sold is 2,600 for 250 t-shirt. But if we use last in first out, we will get 3,900. Okay, for first in first out, we will use the first, right, the first batch that we bought with the first batch that we bought. But sometimes the price is fluctuate, right? The price is rising, maybe because of the current situation, and then maybe it's follow the current price and everything. So FIFO doesn't do a good job so in matching current revenue with the current cost compared to Lifo. Lifo, of course, we will take the latest one, and the latest one is reflect the current price, the current cost, and also the current situation, and then we compare it with our cost. So that's why we can see is a bit higher cost of goods sold in Lifo, but we have a lower cost of goods sold in FIFO. But we have the last one will be weighted average. Okay, for weighted average is actually the most simplest way to calculate, which is not as complicated as FIFO and Lifo. We call it average cost. So this average cost, we call it weighted average cost. So actually this one we will calculate the average cost per unit based on unit and total. Normally we take the average number, the average price, so that we calculate the cost of goods sold and the inventory based on the average price that we get from the total cost divided by unit. So from here, I think I lost my calculation. Need to calculate again. Let me find my calculation. Okay, found it. Not this one. Okay, it's okay. Okay, 5 minutes, 2 minutes, maybe 1 minute. Okay, it's okay. I can calculate it again. Okay, from here, 200 plus 150 plus 225, I think 575, and from here 3800 7 3,800. When you are an accountant, you need calculator, but I don't have calculator around me. So 700 for 7,400. Okay, from here, you divided total cost. Okay, divided total cost. How do you want to get the average cost? Total cost 7,400 divided by 575 is 12.87. So this is the average cost that we want to calculate. So in order to get so it's the same 250. We managed to sell 250. So in order to calculate cost of goods sold, we will use this amount. Instead of Fifo or Lifo, we use the price that we buy from the supplier, but average cost we will use the average unit average price that we already calculated times 250. Then ending inventory is the remaining, is 250 minus 250, so it will be 225 times 12.87. So this is your cost of goods sold and ending inventory. Okay, now we go to we have specific unit cost, but it's not covered in our syllabus. So okay, now we go through to first in first out illustration explanation. So because this is what the best that I can do to explain as simple as you for you to understand. So this is the slide, which is illustration slide. Okay, first in first out, we use all this cost, assume all this item are sold first, then we will, once you sell the inventory, you will choose the oldest cost, and then this oldest item will be sold first, and then will become cost of goods sold. So the newest item are on hand, which is the newest item will be in our inventories. Okay, so the recent cost will be go to our ending inventory, but compared to last in first out, which is we will use the recent cost as our cost of goods sold. So we assume the newest item are sold first, then the oldest cost will be on hand, will be our ending inventory. So average cost is the average cost of each unit inventory is assigned to cost of goods sold. As we go the example just now, we calculate the total cost divided by the total unit, then we get the average cost. From this average cost, we calculated for our cost of goods sold and our ending inventory. Okay, So this is the example, illustration example. So for the beginning inventory, they have 3 shirt, which is one shirt will be cost $10. Then they buy again with the supplier 5 shirt, which the cost of $12 each. So in the total we have 8. They purchase 5 shirts. Then we sell 4 shirts for $20 each. What cost should be assigned to the cost of goods sold? Okay, first thing is we have to identify which is it Fifo or is it Lifo? So this is first in first out. Of course we will use oldest item, oldest cost and oldest item that we have, and of course this beginning inventory is the oldest that we have because this is from last year and for the last financial year. So we will took this because we sell 4, we will choose 1, 2, 3. Okay, then because we sell 4, we only have 3 in beginning inventory. So we will take another one from the second batch, which is you already purchased 5 shirt. So that's mean you took 3 from here, your beginning inventory, because this is your oldest item. Then you took 1. See, before this is you have 5, right? Then you took 1 from this batch to make it 4 because you sell 4, right? Okay. So the inventory will be 48. 48, which means this is your remaining. You didn't sell these 4. So this is your inventory, ending inventory. So still considered as your asset. But your cost of goods sold is 42. Why? Because you take another 3, right? Just now. See? Here. 10 plus 10 plus 10 plus 12. So your cost of goods sold is 42. Okay. Now we go to last in, first out. Okay, the same one. We have beginning inventory, we have 3. And then we have 5 new purchase with $12. And then we managed to sell 4 shirt because we use last in, first out. Of course, we will took the recent stock, which is the recent cost. And the latest item that we bought in. Okay, so we took out this 4, which is this is the recent item. Then this is considered our cost of goods sold. So 4 times 12 is 48. Then this is our remaining inventory. So 10 plus 10 plus 10 is 30 plus 12 is 42. Okay, now we go. So this is last in, first out. Okay, what about average cost? For average cost, okay, the example is still the same. We have 3 beginning inventory and then we have 5 recent purchase. Then we sell 4 shirt. So how to compute the average cost? The total cost, of course, we have 3 beginning inventory. So the total cost is 30 and we have purchased 5 times 12 is 60. So okay, 5 times is 60. So the total will be 90 divided by the total to get the average cost. Then how to get the average cost is 11.25. So total divided by unit is 1125. So our cost of goods sold is based on this number, this average cost, 11.25 times 4, then we get 45, 11.24 times 4 because we only have remaining this 4. Then we get 45. So hopefully you can understand. Fifo, Lifo, and average cost. Compare the effect of 3 most common costing method. So from here, we already calculated Fifo, Lifo, and average because we managed to sell 4 with the price of 20. So the sale price is 80, but the cost of goods sold is different. Fifo we get 42, Lifo we get 48, average we get 45. So from here gross profit is different. Gross profit is 38, Lifo is 32, average is 35. So if inventory price are increasing, so highest gross profit, highest net income. So for Lifo we got lowest gross profit and the lowest net income. So from here, what is the advantage? If first in we got high income, we can attract the investor. But if we use last in first out, we get lower income, but we can reduce less tax. And average cost, we are the middle ground. Okay. During the period of inflation, Lifo income is the lowest. The most attractive features of Lifo is reduced income tax payment. That is probably why it cannot be used in many countries. Okay, so I want to go through example that I gave you just now, so that this will be your guidance. And where is it? Okay, I already give you this question. They have 2 questions, and we will go through this one. Okay, this is the first question. Montana cycles. Okay, I think it's better to open. Okay, which one? So it's better to open my download. Okay, this one. So it's easier for me to sketch. Right. Okay. So, okay. What about Fifo? Okay. Montana started July with 25 bicycle that cost 36 each. This is our okay. Oh, we can choose. This is our beginning inventory. So 25 is our beginning inventory. On July 16, Montana bought 35 bicycles at 60 each. So this is the new purchase. Why? New purchase. Okay, on July 31st, Montana sold 33 bicycles for 105 each. Okay, this is how much we managed to sell. This is new purchase. This is our beginning inventory. So in exam or in any test or any formatting for if you are a costing managers, and this is how we do the formatting. So first one is our purchases, cost of goods sold, inventory on hand. Okay, 1st July is actually we want to record our inventory on hand, which is our beginning inventory, which is we still have this inventory. So we have 25 bicycle that cost okay, first one is using Lifo, Fifo. So we recorded our beginning inventory first, 25 times 36, then we get 900. So this is the total. So this is our total. Then we bought 35 unit. This one, new purchase times 60, we get 2,100. Because we didn't sell this yet, so we included in our inventory on hand. First one, this is from here. We have 25 times 36, we got 900. Then we have a new purchase, 35 unit times 16, we have 2,100. Then we added these two numbers, we get 3,000. Then we managed to sell 33 bicycle because we using Fifo, first in first out. First in first out. Then we will choose 25 first, because this is our beginning inventory. Okay, 25 times 36, of course this number. Then we still have 8 unit, we take it from here. So times 60. So we get 480. So our cost of goods sold is 1380. So from 900 we take it from here, and 8 unit we take it from here, so we get 480. So the total will be 1380. But in inventory on hand we still have 27, because 35 minus 8 unit, so remaining of 27 unit with the cost will be 60. So this is our ending inventory. Okay, now we go to Lifo. Okay, Lifo is a bit different with Fifo. Of course, as we know, Lifo we choose the last in, first out. Okay, so the same. The question is the same. We have 25 bicycles in ending inventory. We bought 35 unit of bicycles, 60 each, and also they sold 33 bicycles. So from here, we prepare the Lifo. Okay, July 1st, we recorded our beginning inventory, so it's 925 unit times 36, and we recorded a new purchase, 35 times 60 is 2,100. Then we recorded our inventory on hand, this is from here, times 36, 900, and then this is from here. Because we didn't manage to sell yet inventory on hand, 35 times 60 is 2,100. But the difference is we managed to sell 33 at 105, is it? Managed to sell 33 bicycle for 105 each. So because we are assuming last in first out, of course we choose this item, the recent purchase. So we took 33 unit from here times 60, because here is 60, so its total is 1980. So our ending inventory is from here, we didn't touch anything, 25, and the remaining, this is time 33 minus 33, we still have 2, so we still have 2 unit. We have 27 unit with the total of 1202. Okay, the last one. We will go to work in weighted average inventory costing method. So from here is actually we calculate the total cost, and the total unit. Okay, this will be a bit okay, this will be a bit confusing because we are using how to calculate cost of goods sold available for sale divided of the number of units. So 900, take it from here, 900 plus the unit is fine. Okay, first of all, we have to calculate the first purchase. The beginning purchase, 25 times 36 is 900. We take it from here. Then we have recent purchase, 2100. So 60 times 35, we got it 2100. So the total cost is 3000, and of course we have to divide it by the total unit. The total unit is 25 from here, plus 35 is 25 plus 35 is 60. So 3000 divided by 60 for each cost will be $50. So from here we can start to calculate based on this average cost, and also, and we know that from the question we managed to sell 33. So this 33 unit we have to multiply with 50 with the average. This is average price, average. That's why we call it average cost. Time 50, we got it 1650, and the remaining is 27 because 35 plus 25 is our total is 60. Then we managed to sell 33, so the remaining will be 27. So this 27 is our inventory on hand times 50 based on the average cost, so 1350. So try to do second question. So I give you we will discuss this in the next class, and I will give you more question. Fifo, Lifo, and weighted cost. So then we will cover, we cover other part because we have 3 part we have to cover. So this is for material, but still we have reorder level, economic order, quantity to be covered. So this is our first part, end of the first part, and I will record again the another part of the chapters. Okay guys, that's all for today, class, and hopefully you can use this video as your revision. Okay guys, take care.